I'm going to start with this long-term, long-run corn farm price chart. This is based on annual average U.S. corn price at the farm gate. We've been through two commodity super cycles that you can see here. The two super cycles had very different reasons for occurring. I'm still quite surprised that we had a second super cycle. But all the conditions, and there were, a half dozen or more conditions that created this second super cycle, all of those have corrected. And now we're back into this low price period. You can see for the last 3 years, we've really come off of this high. And we're entering a long-term low price period that's going to be similar to 2013 to 2018. If we looked at a soybean chart and a wheat chart, it would be very similar information. For the planted area values, this is kind of an important chart to see because when you look at the value of corn and soy rotation, we've come off of some very big highs. Just a couple years ago, we were at $900 for the average value per acre across that. And those numbers are quite a bit higher than the last super cycle. So it's very good values. There's an inflationary impact in this, and I'll mention inflation and sticky inflation a few times, and that's become a big issue for the farm sector is how much input prices are. So in this chart, I'm looking at planted area for the whole sector, U.S. ag sector. This is all of the row crops plus hay plus pasture. It includes a few columns for prevented plant. And you can see a couple things on this far right column. We've gone from 360 million acres total base to 332 million acres. So we're losing acreage at a pretty steady clip. Right in the middle here is the corn plus soy acreage, 154 million acres up to 180. So corn and soy have a bigger and bigger share of the total acreage. And this 180 million acres is kind of a maximum. So if you want to increase corn acres, you have to decrease soybeans and vice versa. Now on wheat, I have that in the first column here, and you can see that we're off quite a bit. So wheat is a crop that's given up quite a few acres on a national basis, U.S. basis. Here's the corn and soy chart showing this really hard ceiling of 180 million acres. We don't think we're ever going to get above that. So the U.S. is a fully developed agronomic system. All arable land basically is being used. On the corn supply demand table for the crop that we just harvested, it looks like we have a really big production number, 16 billion bushels. Yields are really good, really high, 186 bushels per year per acre. We'll look at the yield trend in a minute. Exports 3 billion bushels. That would be a really good number. If we hit that, we're certainly going to have the supply to be able to hit that. And the carryout is still relatively high at 2 billion bushels. We haven't had carryouts this high in 5 years. Here's the yield chart for corn. You could see that for 6 years, we were exactly at trend, or slightly below trend. And now we're quite a bit above trend. I don't think we're a full standard deviation above trend on this long-term calculation. But anyway, that's what we're projecting right now. These bars at the bottom here are the percent of the crop. So you read this on the right axis here. This is the percent of the corn crop that has at least 2 genetically modified traits. So what we call multi-stacked seed variety. And that's well over 80% now. Here's how the corn net export import looks like. So what this calculation is, and I'll take Ohio for example, after we do all the feeding and all of the processing, so dry mill and wet milling that occurs in Ohio, there's 126 million bushels that can go elsewhere. You can see in the southeast and eastern corn belt or eastern United States, there's a lot of animal feeding, so a lot of dairy in the northeast, a lot of hog and poultry in the southeast. And so all this needs to be supplied, and the southeast gets most of its corn from the eastern corn belt. So it'd be getting Ohio, Michigan, Indiana, and then reaching into Illinois. So Ohio basically has enough to meet Georgia's needs on a net export basis. After that, the eastern U.S. has to reach into other locations. This chart is interesting because it kind of sets the value proposition in Ohio, and sets up how much corn needs to come from Illinois. So what we mean by beyond uh, Indiana, Ohio, and Michigan is how big is the total Eastern U.S. demand beyond what Ohio, Indiana, and Michigan can supply. This year, that number's up to 500 million bushels. So it's a pretty good number historically. We haven't been that high for a while. So this tells me, that Illinois is going to be a really strong market going into the Southeast this year. Here's the corn farm price versus carryout to use ratio. There's some correlation here. We have a better way of looking at this, but I know a lot of people think about corn price in relationship to the carryout to use ratio. So I wanted to include this chart. When I look at total U.S. Wheat, and for Ohio, we don't really need to be looking at all wheat, but I wanted to start with the U.S. number. Um, and in particular, I wanted you to see, the area planted in the U.S. So since just before COVID, we've been right at around this 46 million acres. It's been a pretty steady number. So not quite a decade. There was a big drop from 15, 16, 16, 17. We've never really recovered at a U.S. level based on that number. And then our exports have been, pretty steady. We can't quite get to 1 billion bushels of exports of wheat. Exporting wheat is a really big deal in the Western Corn Belt, more than the Eastern Corn Belt. But, this has some impact on all wheat in the U.S. Here's the total wheat trends in the U.S. I think these years below trend at the U.S. level were greatly influenced by the very dry years we had out in the Western Corn Belt. Things have improved the last couple of years, and we're actually putting in a pretty good overall wheat yield number. Here's how the wheat net exports and imports works out. You can see that Ohio, Michigan, Indiana use all the winter wheat basically in local milling. There's not a lot to move out of the state. Most of the movements out of states occur again in the Western Corn Belt. So I'm going to talk more about the world, but to wrap up the U.S. wheat picture, I wanted to point out this slide, and particularly this wheat stocks to use ratio for the world. You can see the black line here. We've been on a 5-year decline in world stocks to use that seems to be really persistent. Now, in the U.S., with two big crops that we've had the last couple of years, two pretty good yields, we've bumped up our stocks. But, the whole world has reducing stocks. And because wheat is primarily used as a food and not a feed, this sets up a world price relationship between world corn and world soybean price that makes wheat acres very durable. When people talk about how we're going to shift acres next year, what we're going to plant next year in corn and soybeans, sometimes they're willing to give up acres of wheat in the U.S. I think that the world price makes it that our wheat acres need to be the same next year as they were this year. And this is particularly the case in the Eastern Corn Belt, where we mill almost everything that we produce in the Eastern Corn Belt. So here's Ohio wheat by class. If we just looked at the soft red winter wheat, that's all we need to look at. You can see, my production of soft red winter wheat is my same number for production for all wheat. So basically, the only thing that we're growing in Ohio is this soft red winter wheat, a really good milling wheat. So the soft red winter wheat supply demand, this is for the whole U.S. Where production is up slightly. The disappearance is going down quite a bit, and we're projecting a carryout of 90 million bushels for soft red winter wheat. The export outlook for the SRW is, dominated by the the Gulf, but there's a little bit that goes out the lakes and the Atlantic. Mexico is really important to corn, soybeans, and wheat. We have the other grain details here for wheat going into Mexico. On corn, I want you to note how big this number's getting. So we do what's called a total corn equivalent, where we take meats, ethanol, distillers grains, and we convert that all back into whole bushels of corn equivalent. And Mexico, this data is a little bit old, but they're up over 1 billion bushels, and you can see how long they've been at that big of a number. So they're more than 3 times bigger than Japan in terms of a user. So Mexico continues to be really important. At the administration level, we still don't know what a USMCA 2 trade deal is going to look like with either Mexico or Canada. So that's something important to keep our eye on. Also, Canadian uses of all forms of corn is a really good number, up almost 500 million bushels. Here's a chart showing all of that whole corn going to Mexico. These are more current numbers. This data is easier to track on the whole corn. So it's getting to be, over 1 billion bushels just of whole corn. And then soybeans, also a very big number going into Mexico. So I mentioned that I would talk more about price. PRX, one of the things we do is a very long-term outlook called the Blue Sky model. It's a 10-year outlook. So the goal of the Blue Sky model is to help people invest in hard assets in agriculture. So we need a way to predict what the average annual farm price is going to be for corn and for soybeans. Right now, we're showing that long-term corn price could actually go below $4. We don't see anything on the horizon that can really lift that in a big way. And a lot of this has to do with how productive the U.S. is in producing corn, how strong the yield trend is. But it's also indicative of how fast Brazil can expand to any kind of price signal. And I'll talk more about that in a minute. To to take into account some of the rest of the world, it's important to have a context. So the world right now produces 3.6 billion tons. This is, million metric ton calculation. So 3.6 billion tons includes almost all the row crops. This is oil seeds, and grains. But you can see a third of it is stuff that people eat directly. Wheat, rye, and rice is a third of it. Feed grains that are used for animal feeding, all other feed grains plus corn is, basically another third, and then oil seeds are the last third. When we look at oil production, this is important to note, and it really impacts corn from a soybean competitiveness standpoint. You know how soybeans competes for acres in the U.S. When we look at total oil production in the world, you can see that we're slightly below trend. And this doesn't look like a big gap, but on a global basis, anytime we're below trend, that's a really big gap. So we've been below trend now for a long time. Soybean oil has done a good job of growing, mostly because of increased yields in the U.S. and expanded acres in Brazil. Palm oil, you can see down here, palm oil was flat for almost a decade. And just in the last 2 years, we're finally starting to see some expansion in palm oil. There's been no expansion in canola and no expansion in sunseed. So those two are talked about a lot. Canola is interesting because it has 2 to 3 times the oil density per acre as soybeans. But canola's, grown at high latitudes, in very northern climates. Canadian prairie provinces is a very good place for high yielding canola. And soybeans are grown in South America where there's lots of acres for expansion. So that's why this is growing. So there's a tremendous pressure from the world to increase soybean and palm. I'm going to show you some world production statistics. So I've included the tables. We can just look at the maps and the charts to get a sense of it. But on world corn production, I have 20-year, 30-year, and 10-year trends. The 20 and 30-year trends are almost identical. The 10-year trend has been a slight reduction, and I think that has a lot to do with the 3-year La Nina that we had in South America. The worst year of that drought in Argentina was twice as bad as the U.S. 2012 drought. And then it also has to do with the prevented plant problems we had starting in 2019. We had a 4-year run there where prevented plant and then dryness at the end of the growing season in the Western Corn Belt really impacted our total production. So does this mean that, seed technology and other technologies aren't keeping up? I don't think so, but we don't know for sure that that's the case. I'd just point out that, the short-term trend is slightly declined from the long-term trend. Here's a map of corn production. China has a really big number. They use all their corn and import quite a bit more. But most of the corn is still grown in the U.S. Brazil, when they expand soybean acres, only half of that expanded acreage gets a second crop or a safrinha, corn crop on it. And the corn yields in Brazil are still about half of what they are in the U.S. So even though Brazil expands soybean acres very quickly, whose yields are equivalent to North American soybean yields, their corn production still kind of lags. But it is, getting to be a major supplier. Here's world wheat production. All three trends, long term, medium term, short term, are all about aligned up. There's a slight decline in the short term trend. I think that has mostly to do with the war in Russia and Ukraine. Here's a look at the world wheat map. You can see that wheat is very much a northern hemisphere crop. The big exception in exportable bushels that are available is in Australia, a little bit in Argentina. So it's important to note, particularly for corn and soybeans, what is all of this production about? And it's really about meat. If the world didn't eat so much meat, we wouldn't need corn and soybeans. And even though biofuels kind of dominates a lot of the conversation, meat is by far the huge majority of the use of corn and soybeans. In this chart, we can see that aquaculture now is just as big as poultry and pork. It's very close. And actually, aquaculture has now exceeded the wild caught fisheries. So I think aquaculture is going to continue to grow in this higher price environment that we have, the sticky food inflation. Aquaculture and poultry are getting the most attention overseas because those are the best converters of feed into meat. Aquaculture sometimes has a better than 1.3 to 1 feed to meat production, and then poultry, is probably on a global basis, near 1.5 to 1. Pork, I think, we could see a rebound in pork. Beef, you don't see very much change in beef, and beef has gotten very expensive. And at, an over 3 to 1 conversion ratio, you can see why beef is going to struggle in a higher price environment. And what's driving all that meat consumption? I think that it's mostly urbanization. It's not population growth itself, it's urbanization. Each of these bars are 5 years worth of data. So for the next 5 years, we're expecting to add more than 80 million people a year to urban environments. Urban environments allow people to have manufacturing jobs and improve their incomes and eat more meat. So even though we're kind of peaked at the urbanization rate and it's going to be on a long-term slight decline, remember each of these bars is 5 years, and we're still going to be near 80 million people a year for the next 15 years. So the underlying demand fundamental of expanded meat consumption, I think, is the really big story for global commercial ag, and particularly corn and soybeans. Here's a look at exports and imports. So this will get us into the trade. Again, I've included the table so you can look at details if you need to, but we'll look at this by chart. So corn, the U.S. Has 77 million metric tons that they can move. South America altogether has a very similar number that they can move. There's quite a bit still in the Black Sea region, and then the big demands in the Middle East, North Africa, South Asia, and Asia. Here's the wheat chart, and this, Middle East, North Africa is a really, really big import area. Southeast Asia's a really big import area for wheat. Again, this doesn't really affect Ohio, wheat production decisions because we mill and use so much of the wheat locally. But I want you to understand the world fundamentals. So this chart, the corn soy complex of trade, I have 5 year trend lines here. You can see that the trend lines were accelerating really good, and then they kind of dropped off. This green chart is a big change. So let's look at the data on this. So the orange trend line from 2011 to 2020 was growing at 18.5 million metric tons a year. And so the corn soy complex is corn, whole soybeans, and soybean meal trade. You can see that we're up to 450 million metric tons a year of that trade. So the growth rate since 2020 has dropped from 18.5 million metric tons a year down to 12.5 million metric tons a year. Why is that happening? Well, I think this period since COVID has coincided with a commodity super cycle and a sticky inflation period where food is more expensive. So even though we're urbanizing at a very steady rate, I don't think people can afford to eat as much meat as they could 10 years ago. And to me, this is the biggest evidence of a sticky food price inflation, and why meat expansion is going down. it looks like the last 2 years have been good, and so we're starting to move back up trend. We're not above this short-term trend yet, but the last 2 years of trade in the corn soy complex look pretty good. So there's reason to be hopeful, but the pragmatic view would say this is our growth, our annual growth, the 12.5 million metric tons. Here's another way of looking at that same information. These are 5-year averages, where you see our 5-year average from 2005 is at 8, then we jumped to 15, then almost to 20, and now down to 10 on a 5-year average. But we have some really, strange datas that it has occurred, between COVID, the Gulf War, I'm sorry, the Black Sea War, and the super cycle. This data block, has some bad years, but every now and then we just get a bad year for some reason in trade. So the world is dominated by three export hubs: North America, South America, and the Black Sea region. As you know, there's been a war going on in the Black Sea region. I'm going to talk briefly about South America. Their corn production is going up at a pretty steady pace. So that's something to keep an eye on. The corn yields in Brazil are still very low compared to the U.S. They're slightly better than half, but it still is a poor yield. And why can they have soybean yields that are equivalent to the U.S. but corn yields that are only half? I think part of it is that they begin with poor soil. Chaparral soil is not near as good as the prairie soils that we have. Also, they're double cropping every single year. So that's a huge nutrient demand that has to come in. And then Embrapa in Brazil has been working hard to hybridize and develop the soybean seed, for a very long time. And it could be, that seed technology is a limiting factor. But all the big seed companies operate in Brazil, and you could look, for the last 20 years, there's not really an acceleration in this Brazilian curve. So I think this is going to be a durable circumstance. In the Black Sea region, oil seeds have not been impacted at all. And so what happened is some areas went out of production because of the war. The oil seed acres all shifted to the west in Ukraine. Europe and Ukraine both process the sunflower seeds. That's the main oil seed. And so they've maintained that production. What's gone down has been the other grains, but only slightly. In Russia, the wheat growth has been pretty good. Here's a look at corn production in the Black Sea, and then we'll take a look at wheat. So here's the wheat net export imports. There's a lot of news lately about Russia getting into a barter system with Asia, and particularly China, to trade wheat directly for cars and washing machines and other durable goods. Our we have some analysis on that. I don't think it's going to make a big difference in how overall wheat trade goes. Egypt has always been one of the really big buyers. Egypt's not on this chart, but Russia is a very big supplier to both Egypt and Turkey. Here's the some bar charts comparing the total Black Sea exports versus the other two export hubs. You can see that it's been pretty steady, even though the war's going on. So it's not a total train wreck in terms of availability of supply to the rest of the world, but it mostly, again, affects grains. I'm going to talk real briefly about China, and then we'll get into some Q&A time. So you've heard a lot about China demographic problems, how the one-child policy made it so that their population is not growing, is actually declining. Their population is aging very fast. This chart showing total Chinese meat production, if you look at the last decade or so, it looks pretty flat. They had a big problem with ASF. They seem to have recovered from that. So I think this probably is indicative that China's growth is slowing down. Here's the total Chinese soybean imports, and soybeans greatly affects every corn farmer because of how we rotate those two crops. So in this chart, I've detailed, the U.S. versus the rest of the world trade into China. And so you can see back in the first Trump administration when we had the 2018 trade war versus now, you can see that the current situation is more impactful than what happened in 2018. What's not shown on this chart is the world record soybean exports we had out of the P&W in 2019. 2019 was the big prevented plant crop year where we had 18 million acres total in the U.S. that did not get planted. And 19 was still a big export year for soybeans because we had old crop and new crop to sell. Is that going to be the case this year? I'm not sure. The rest of the world is taking U.S. soybeans at a pretty good clip, not enough to replace China. But anyway, this is to me this is kind of an interesting chart that shows kind of the current trade issues with China and what's going on. Now, you know that China has agreed to buy in the next 3 years 25 million metric tons. You could see that's probably really close to what they've done the last couple years, but it's a much smaller number than what they've done in previous years, where they've been, well over 30 million metric tons, in some years in the last decade. Here's total veg oil consumption in China. Again, it looks like it's flattened out. So overall, what's my takeaway from China? I think that China has probably finished its really rapid expansion in terms of being a ever-growing consumer of corn and soybeans, wheat, other feed grains. So I think their growth is flattening in a very real way, but they're still going to be the biggest importer for the rest of our lives. So there's somebody we really have to pay attention to. Here's China total grain imports. In terms of feed energy, coming out of the African swine fever, China really upped its feed energy ratio inside of the ration formulations, and they've dropped off that a little bit here. But what's not shown on this chart is cassava. Cassava is another huge import into China for feed energy. That's going to conclude my prepared remarks.